Hello everyone, George DeSantis here with a look at the market for the week ending August 25th, 2017. Before we begin to look at charts, we do the usual, which is to read the disclaimer. So let's do that. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice, since I'm not one. So let's start today with a look at the weekly chart of the S&P 500. As we look at this chart, we can see that last week we mentioned that this market, the S&P, dropped into the buy zone, which means it closed twice below this 9 EMA and above the 30 weighted moving average. And I was saying that I would expect that since this is a buy zone, we'll get a little move up. Well, we got that, and we're still in the buy zone. We're still between the 9 and the 30. The 4 is just slightly above the 9. Now, on the other side of the coin, on the more negative side, parabolic has now moved even further away from the most recent bar. So that's a bearish sign. On the positive side of things, we still have that 2400 holding here as support. And it looks as though it might continue to do that. And perhaps, here's my thinking on this, is that perhaps we will meander here. We'll consolidate these gains all the way back here. Consolidate these gains until we get to the middle of October, which seasonally is the best time to be entering the market, buying stocks, etc. So most likely, this market continues to consolidate with some volatility until we get into October. Certainly there are stocks to buy now, but we have to scan for them, you know. If we look at MACD is trending down still. So we're still vulnerable, you know, in terms of this bearish divergence of MACD. We're still continuing to go down here. So there's still that vulnerability. Shaiken money flow, well, it's deteriorated a bit. In fact, it's almost at the zero line right now. And Williams percentile remains above 50%. And what I have found is that as long as Williams remains above 50%, we don't have to worry too much about the collapsing of the market. Now, RSI crossed below the 60% line, and it's still above the 40% line. So in general, in conclusion, the weekly chart still showing some vulnerability. However, last week it perked up a bit. We had some buying come in here when we close in this buy zone between the 9 and the 30, and the 2400 line seems to be holding, or so far it's holding. So we're still looking on the positive side, still more bullish than bearish, I would say. So let's look at the daily chart. On the daily chart, since we had this pullback here back in August, early in August 10th or so, since we had this crossing of these trend lines, we continue to go down, and we hit the 2.7 standard deviation line here, which is a lower Bollinger Band, and we started rallying a little bit. So we'll see. Now the encouraging thing here is that parabolic has now switched to below the most recent bar. So that's a bullish sign. It says trend is now switched to up. Since it was a downtrend all the way here, now it's switched to an uptrend as of Friday. MACD is trending up from below the zero line, so that is usually a good sign, because as Alex points out, one of the best times to be buying a security or the index is when we have an uptrend from below the zero line of MACD. On the other hand, Shaiken remains right there around the zero line. In fact, it's a little negative. Williams is is attempting to go back up above 50%. We'll see how soon that happens. Probably not until we get to October. And of course, RSI 12 is smack on the 40% line. So in general, the S&P, the general market, seems bullish on the weekly chart still, although there is some vulnerability. Most of the indications are bullish. And on the daily chart, even though we were in bearish territory here, we seem to be rallying up again with the parabolic now in bullish territory below the most recent bar. So let's take a look at some individual stocks. Before we begin to look at the individual stocks, let me once again remind you that I couldn't possibly give anyone advice on what they should invest in and how much, etc., because certainly I don't know what your financial situation is and what your needs are and what your goals are. So with that in mind, let's take a look at Apple. We have Apple here. We have the 4 EMA above the 9. We have the 9 above the 30 weighted moving average. So the trend is up. We can see that Apple made sort of a double top here when it hit the 90% line. This is a regression channel from Best Choice Software. At the bottom of the chart here, we see 3 indicators. We typically use the RSI 12, and you can see it's above the 50% line, which is good, which is positive. And we can see Williams percent are above the 20% line. So although Apple pulled back a little bit here, it seems as though there's a chance it's going to be going higher from here. Let's take a look at something else. Now here's a seasonal chart on Apple. And what I've done is highlighted the best move here, best rating on the whole zone. And so we see that October 7th or October 23rd, those couple of weeks, we probably get a nice move 90% of the time, average profit of 6.33%. Here's a chart of Facebook, same regression channel. Facebook became overbought in this region up here, and it's pulled back into the buy zone between the 9 and the 30. Right now it's sitting at the extreme of 23, so there's room at the top. Also, RSI 12, we could see it broke up below the 50% line, and Williams percent R has spiked down a bit. So the fact is that now that Facebook is within this buy zone here, we might expect it to go a little higher. And here's a seasonal chart on Facebook. You can see I highlighted the seasonal move between October 10 and October 24th. This is a time when the market tends to move higher. Many stocks tend to move higher. We have 5 out of 5 years, 100% of the time, we have an average profit of about 9.3% with a pretty good rating. Take a look at another one. And here's Visa. And the first thing I'd like to point out is that the regression lines are very close to each other. And when you're looking for a stock to buy for the long haul with very little volatility, this is a good one to look at. This is the kind of stock you want to look at. So you have a very narrow range here between the 90% and the 10% line. Now, yes, Visa is looking overbought here at 90%, but it's one of those that I like for the long haul, so I am holding it here. RSI 12 is above the 50% line. Williams percent R is above the 20% line. And so this is something which I want for the long haul. Let's take a look at the season. Now, as we look at the seasonal chart on Visa, you can see this highlighted portion here from October 25th to November 8th. We get a move about 70% win percentage, 7 out of 9 years, with an average profit of about 5%. Not terribly bad, not too bad. So let's take a look at some other things, some other stock. And here's a chart of Adobe. Mentioned it in an email recently. Nice uptrend, tight volatility range here. It's now at 26 on the extreme lines, so it's between the 10 and the 50. So there's room at the top. And well, when we look at the seasonal chart, you'll see what I'm referring to. On the seasonal chart, the best time of the year really is in March. However, if we search between September and the end of the year, see we get a nice move in September too. September 5th to September 21st. We get a move about 80% win percentage and average move about 40%. So Adobe looks like that. Let's take a look at another one. And here's a chart of Netflix. Netflix has a greater degree of volatility. As you can see, the lines are much wider than the ones we've been looking at, some of the ones we've been looking at. So right now we see that Netflix became overbought here and pulled all the way back into the buy zone here. So in fact, it's close to 10%, it's 12% at the extreme level. And let's take a look at the seasonal. And if we check the seasonal for the best time to be trading this, it's early in January. Between January 21st and February 4th, we get a 91% win percentage with an average profit of 18%, and that's pretty good. So let's take a look at something. So before we go on to another stock, staying with Netflix, what I did was search for the best trade between September and the end of the year. And you see that October 25th to November 8th is another good opportunity for be trading this. It's a 90% win percentage and average profit of 8.07. Let's now look at something else. Here's SSO, which is the S&P leveraged ETF. And we can see that it became oversold here, as it did here, and here, and here. And so now it's trending up again. So that looks good for the general market. Maybe the S&P will rally from here, because it definitely was oversold according to the regression channel. We're now at an extreme of 8, so that's terribly oversold. And we can look at the seasonal. And here's a seasonal chart, and you can see I highlighted the best trade, and that is between November 20th and December 6th. Doesn't mean that it doesn't trade any higher than that for any more time, because if you can look here, you see from September all the way into the end of the year, there's basically an uptrend. In fact, if you extend it into the next year from January, you'll see that it trades all the way up into May. This is the old saying, sell in May and go away. And from May to September, you get this pause in the market. So let's look at something else. And here's a chart of Berkshire, BRKB, the B shares. And we can see that it became overbought here at 90%. Came back a bit and is back up to being overbought. It's now at an extreme of 91. However, I'm not trading Berkshire. It's a core holding in one of my portfolios. But let's look at the seasonal. You can see on the seasonal here, if we get the best trade, it would be November 20th to December 6th. An 81% win percentage and a profit of approximately 4.36. But the thing to notice is it trades with the general market, basically. From September to the end of the month and then continuing into January all the way into March, okay, Berkshire tends to go up. I think that's all time we have. So let's stop here. Now, since I've been looking at individual stocks, I've been basically looking at stocks that I'm interested in. Some of them I own. However, what I want to suggest is that if any of you have a stock that you're interested in and you'd like me to discuss it during the next webinar, the next look at the market, just send me a short email. Just give me the name of the stock with a symbol. See you next week. Have a good week.